Hello and welcome to the weekly market metrics. We are in week 48 of the year, just 1 month left in 2025. I'm actually getting stressed thinking about the resolutions. Never mind. Let's talk about markets, and it's once again time for our weekly dose of market metrics. After BANKNIFTY and MIDCPNIFTY hitting all-time high last week, NIFTY and SENSEX also hit new all-time highs this week. It's been 14 months since the last all-time high on Nifty happened. In that period, Nifty fell 17% from top, a reminder of how volatile equities can be. Hopefully, this breakout sustains and the next leg up is smoother. On the news front, the RBI's latest report says India's economy remains resilient with strong growth in manufacturing and services supported by GST reforms. However, global market volatility and elevated equity valuations continue to pose a risk. While the markets are at an all-time high, but the typical euphoria we usually see at such levels is missing this time. That could be because of a weak breath. While the index is at an all-time high, many individual stock portfolios are underperforming. One more reason to invest in indexes rather than get into stock picking. What do you think? Let me know in the comments. Anyways, let's get started with the charts and indexes. As always, Nifty first. For November, Nifty gained 481 points or 1.87% over last month's close. This also marks 3 straight green monthly candles. The month's range was 992 points, roughly 4%. The 2025 average monthly range is around 1400 points, making November the second lowest range month of the year after August. Every other month has seen a 4-digit range. The monthly candle indicates a bullish sentiment as Nifty is sitting close to all-time highs. Support and resistance levels on the monthly time frame aren't always the most useful from a trading standpoint. So I'll keep it simple. November's low is at 25,300, that serves as a support, and the all-time high is 26,300, that acts as a resistance. Now let's look at Nifty through the lens of monthly seasonality. With November behind us, let's take a look at Nifty's monthly seasonality. After a strong 4.5% move in October, November added another 1.87%, taking Nifty's 2025 year-to-date returns to 10.82%. As we discussed last month while reviewing the October seasonality table, November historically has a higher probability of closing in the green. And that pattern played out once again. Now we are stepping into December, the month with the highest historical probability of delivering positive returns. Will it print a green candle again this time? Let's see. For a bit of a contrarian perspective and a reminder of how recency bias can cloud our judgment, in the last 3 years, 2024, 23 and 22, December has closed in red twice. So that's a good data point to keep in mind. On the weekly time frame, Nifty gained 135 points or 0.52%, marking 3 consecutive green weekly candles and closing at 26,202. During the week, it hit a high of 26,310 before settling 108 points lower. Resistance remains at 26,310 and above that there is no clear technical levels. Support comes in at 26,100 followed by 25,850, the low from the past 2 weeks. This week's candle breached both last week's high and low, eventually closing 360 points, that is 1.39% above the current week's low. It was an eventful week with a total range of 468 points. The weekly structure remains bullish and at all-time highs, long setups typically make more sense than being a contrarian. A pullback near 26,100 would still keep the uptrend healthy. On the daily chart, Nifty started the week with 2 red candles on Monday and Tuesday. And many traders began assuming last week's move towards 26,250 was a fake out. But Wednesday delivered one of the cleanest uptrending days in a long time and Nifty rallied 320 points, that is 1.24%, and almost engulfed the previous 7 daily candles. On Thursday, Nifty hit a new all-time high at 26,310, followed by a mild pullback on Friday towards 26,200 zone. With that, the new resistance is the all-time high at 26,310. Support sits at 26,100 followed by 25,850. Just like the weekly chart, the daily structure remains in an uptrend as long as the 26,100 level holds. On the 1 hour chart using the 50 EMA to gauge the trend, Nifty dipped below the EMA on Monday and chopped around on Tuesday on monthly expiry. As has happened many times before, there was no downside follow through and the index quickly reclaimed the 50 EMA on Wednesday and held above it for the rest of the week. Interestingly, the 50 EMA on hourly chart is also sitting near 26,100 level, the same support highlighted on the daily and the weekly timeframes. That makes 26,100 a strong confluence zone. The hourly bias remains positive. As long as Nifty holds above this confluence area, the structure favors continuation on the upside. Moving to the overnight versus intraday action in Nifty, overnight moves continue to remain muted. Once Nifty decisively breaks about 26,300, we might start seeing stronger positive gaps, but for now, we'll have to wait and watch. This week, Nifty opened with positive gaps on Monday, Tuesday and Thursday, adding a total of 0.29% in overnight gains. Intraday moves, however, remained almost flat at 0.03%. With 4 weeks left in 2025, Nifty has gained 9.79% from overnight moves and 2.15% from intraday moves. Moving to Bank Nifty on a monthly time frame, Bank Nifty gained 1,976 points or 3.42% over the last month's close. It continues to outperform Nifty on the monthly time frame, with each of the 3 monthly candles gaining more than Nifty. November's range came in at 2740 points, which is 4.8%. Similar to Nifty, Bank Nifty is also trading near its all-time high. 57,600 will act as support, while all-time high at 59,900 serves as an immediate resistance. Talking about Bank Nifty monthly seasonality, the month ended with 3.42%. Let's see how December fares. Unlike Nifty, for Bank Nifty, December is not really a high win rate month. Moving to the weekly time frame, Bank Nifty added 885 points or 1.5%. It hit a new all-time high this week as well, touching 59,897 before closing 145 points lower at 59,753. This week formed a strong green candle, clearing the doubts created by last week's shooting star-like candle. Support sits at this week and last week's low around 58,600 with resistance at the all-time high of 59,900. Overall, Bank Nifty looks relatively more bullish than Nifty on a weekly time frame. Moving on to the daily time frame, Bank Nifty printed 2 red candles and 3 green candles. On Wednesday, Thursday and Friday, it continued to make new all-time highs. Support lies at 59,500 followed by 58,700 and 58,600 zone. Resistance remains at 59,900. Looking at Bank Nifty on an hourly chart, it chopped around the EMA on Monday and Tuesday, and then post first hour on Wednesday, it stayed above the EMA till the end of the week. Across all time frames, Bank Nifty is bullish. A minor pullback is possible, but the broader trend continues to point higher. Over to Midcap Nifty on a monthly time frame. Similar to Nifty and Bank Nifty, Midcap Nifty also printed 3 consecutive green candles on the monthly time frame. It gained 4.28% or 576 points in November to close at 14,044. Even though midcap is at an all-time high, the index doesn't fully reflect the broader midcap space. Many midcap stocks are still far from their highs. On midcap Nifty index, support is at 13,450 and resistance at 14,095. On the seasonality front for midcap Nifty, as shared earlier, we did 4.28% for November, which was a high win rate month. Let's see what's in store for December. But we have limited data for this index, so I won't read too much into it. On to the weekly time frame, Midcap Nifty hit a new all-time high at 14,095, which now acts as an immediate resistance. The index gained 1.39% or 192 points for the week and closed at 14,044. Support sits at 13,850 and then at 13,450 with resistance at the new all-time high of 14,095. The sentiment remains bullish, similar to Bank Nifty. On the daily chart, Midcap Nifty printed 3 green candles and 2 red candles, hitting new all-time highs on both Thursday and Friday. Resistance remains at the same level as the monthly and weekly time frames at 14,095, while support sits at 14,000 and then at 13,750. Talking about Sensex, similar to Nifty, Sensex on the monthly time frame printed 3 back-to-back green candles, with November adding 1768 points or 2.11%. The new all-time high at 86,056 serves as immediate resistance, while support sits at 83,700. Monthly chart looks bullish with no bearish signs at the moment. Moving to Sensex on the weekly time frame, it finally hit a new all-time high after missing it by just 176 points last week. Sensex added 475 points this week, up 0.56% to close at 85,707, its highest weekly close ever. That also makes it 3 straight green weekly candles. Immediate resistance is at 86,056 with support at 85,300, then at 83,200. And remember what I said last week, when Nifty hits an all-time high, Sensex usually follows. It happened this week. My prediction rate on these obvious calls is 100%. On the daily time frame, Sensex opened the week with 2 red candles followed by a strong Marubozu green candle on Wednesday and then 2 indecisive candles on Thursday and Friday. Thursday did mark a new all-time high but closed lower. The resistance remains at 86,056 with support at 85,600 and 84,500. As long as the 85,600 level holds, the bias stays bullish and any downside move is likely just a pullback. Moving on to the rate of change, in week 48 of 2025, all indices closed in green, BANKNIFTY being the strongest at 1.5% and MIDCPNIFTY at 1.39%, followed by SENSEX and Nifty. For November 2025, all indexes are comfortably in the green, with MIDCPNIFTY leading on the monthly time frame. All 4 indexes are now at their all-time highs. Year-to-date, Nifty has given returns of 10.82%, while BANKNIFTY remains the top performer with a solid 17.48%. Sensex is up 9.68% and mid-cap is at 8.8%. Moving on to the directional bias, just like last week, all 4 indices continue to hold a positive short-term and medium-term bias, with price staying above the 21 EMA and 50 EMA on the daily time frame. The overall sentiment remains positive, with December historically being a positive month. I'm hoping for a continuation. Looking at the top performing sectors this week, we have 4 new entrants: Pharma, Media, PSU Bank and Metals. Nifty Bank is at the top for the past 2 weeks. IT is taking a breather after being at the top for the past 2 weeks. Talking about the ranges, straddle prices and expiries. On Wednesday, all indexes recorded their highest range day of the week, a bit similar to last week. Not sure what's with these Wednesdays. Nifty's 5-day average range is up to 210 from 160 last week. 10-day average has also inched up from 177 to 185, ease volatility back. Meanwhile, Nifty 2DT straddle premium is just at 177, down from 207 last week. This is odd because on range we see an expansion, but straddle pricing is saying something else. Perhaps the option market is not pricing anything negative, and that's showing in lower IVs also. Now, talking about Nifty's expiry, this week was the monthly expiry for Nifty, except for the last hour drop of 175 points. The entire session was quiet, staying within a narrow 110-point range, and Nifty closing minus 75 points or 0.29%. It turned out to be a straightforward expiry for non-directional traders. The straddle opened at 120 points, not a great premium for a monthly expiry, but given the expected volatility, the day played out relatively smoothly. Sensex expiry though was not as straightforward. It saw a wide range of 582 points with the ATM straddle price at 325 points. The index moved sharply in both directions, making it a tough day for non-directional traders. And honestly, I'm not sure how long option buyers make money in such expiries. If you're one of them, do let me know in the comments. Talking about India VIX this week, it dropped 15% after gaining a similar percent last week. It closed at 11.62, down from last week's 13.63. Nothing much to read into here in my view. Moving on to commodities this week, the commodity pack was firmly led by precious metals this week, particularly silver. Gold posted an okayish gain of 1.45%, consolidating its strong long-term trend, and now sits at just 4% below its all-time high and a YTD return of 55%. As I said, silver was a standout this week, achieving a sharp weekly gain of 6.5%, which led to a massive 76% YTD performance, signaling superb conviction. Copper saw a mild gain, maintaining its healthy medium-term trend and staying less than 7% below its all-time high. On the energy side, crude oil was positive at 1.77%, while natural gas ended in red after a solid plus 9% on monthly. Overall, precious metals showed renewed strength, base metals remained firm, and energy is a mixed bag. In summary, the markets are broadly positive this week. All indexes are at their all-time highs, and India VIX, our volatility index, is also indicating calm. So as we step into December, as of this week, it looks like we should get a continuation of this uptrend. Now, as to what to expect in the coming week, well, next week is the first week of December. We have a full 5-day trading stretch with an RBI interest rate decision announcement on 5th of December, which is Friday at 10 a.m. Will the Friday volatility be back? Let's wait and watch. Also, let's see if the market continues on its uptrend, making new highs, or it chooses to consolidate a bit before making its next move. It's always better to react than to predict. That's what I've learned all these years. So that's pretty much this week. And yes, don't forget to subscribe to this channel. Until then, stay curious, stay steady, and have a great weekend. See you soon.